in dealings with the capital market, which the banks, the insurance companies, the players in the market, in the capital market, the pension fund administrators and fund management entities, they are all looking for these bonds that are offered by governments, sovereign governments and sub-sovereigns like state governments, and also corporates. Islamic finance came up with an alternative, which is the sukuk. And the sukuk, they are what are to bond investors, they are to Islamic investors what bonds are to bond investors. So Islamic finance, it has been able to develop within a short period of only 40 years, of only about 45 years since the first commercial Islamic bank was established, which was the Dubai Islamic Bank in 1975. Now it has grown to over 500 institutions in the world, with total assets, in banking institutions I mean, and with total assets comprising the three sectors of banking, insurance, and capital market of over $2.2 trillion. Now this is regarded as a very fast growth, because at one time during this period of 4 decades, the growth rate was up to between 20 to 25%, though the growth rate has slowed down now on account of of a number of several factors. But this has shown that as an alternative, it is a viable one. And it has attracted customers from all religions. So it is not a religious product, it is a commercial product. It is a financial product. It is just an alternative way of dealing, of making making profit. Just like you have green bonds for investors who want to invest only in projects that are environmentally friendly. So this kind of filtrations, they are the same filtrations that Islamic finance does in the financial markets. It filters what does not accept, what is not acceptable under those prohibitions. Then it filters them out and people are able to deal with them. So banks, Islamic banks, can offer financing for consumption, like household items. It can offer financing it can offer housing finance. It can offer agricultural finance, industrial financing, financing small businesses. And the Islamic microfinance institutions have been very, very successful in integrating the financially excluded into the financial sector. And you have a rise in the number of people that do business through the organized financial sector, which will create a lot of wealth, because it will bring people who earlier their wealth was stuffed under mattresses. But now they are bringing it into the financial system where deficit units can benefit from it, and you'll get a good return. And the returns that you get, the Islamic banks, just as conventional banks have got fixed deposit accounts, Islamic banks have also got mudaraba, that is profit sharing investment account. These investment accounts, they mimic the conventional account, but based on profit sharing, loss bearing. That is, if there is profit, you share with the bank. And if there is a loss and there is no negligence of the bank, you, the depositor, will bear the loss. But because the operations of the banks, the Islamic banks, is geared in such a way that the question of loss, except in cases of extreme negligence, they rarely occur. So they can even specify for you a target profit return. And some people may feel that this is this is equivalent to fixed deposit account in conventional banks. No, it is not. It's a target profit. It doesn't say, I guarantee for you that you'll get this return. And I think one important thing that we need to talk about is this product of Islamic finance, the innovative product of Islamic finance that I just mentioned, which is the sukuk. Because now in Nigeria, we have got Osun State government, as early as 2011, they issued a sukuk to build schools, high schools. And this sukuk was oversubscribed from investors. And the federal government has issued 3 different series of sovereign sukuk to build roads. And travelers in Nigeria can testify to that. When you travel along the highways, the federal highways, you see chunks of road that have been built under the sukuk, and you see the signboard, sukuk. What did the federal government do? It invited investors to invest in this sukuk, which is a paper, a commercial paper that it issued, that is Sharia compliant. Now the investors, they invested, and the proceeds of the investments, they are kept in trust by a company that is bankruptcy report and that is not under the control of the federal government. These proceeds, they are used to build chunks of road which the federal government specifies. These roads, technically and essentially, intrinsically, they belong to the sukuk investors. And then the sukuk investors, acting with the sukuk investment company, the issuer that is holding the sukuk asset in trust, that company enters into a lease contract with the federal government that the roads belonging to my investors, they are going to be leased to the federal government as part of its social commitments to the nation. So the federal government will be paying rentals every 6 months, which is the return on the sukuk coupon. And at the end of the 7-year period, which is the duration of the sukuk, the tenure of the sukuk, the federal government will purchase the sukuk assets, the roads, from the sukuk companies, from the investors, at the principal amount for which the roads were constructed. So the sukuk investors will get back their capital plus the premium which they have got. Now the beautiful thing about this is that these sukuk, they are tied to assets, they are tied to projects, they are tied to an investment activity, which is the nature of all kinds of investments in the field of Islamic finance. There has to be an asset that is created or that is transferred or that is subjected to an investment activity. You just don't create money out of money. You have to create money out of making use of that money to buy an asset or to transfer the asset or to construct the asset. So this is the beautiful thing about sukuk, is that when you invest, you will see your investment. But people that invest in government bonds, you don't see it. Maybe it is just invested to finance the budget deficit of governments and other things which some people who want to do impact investing, they want to see the impact of their investment. Now that you can only get when investment is in the real sector, when you invest in infrastructure bonds. And sukuk, it plays the role of infrastructure bonds. Using sukuk, we have seen how these roads are built in other climes. So many projects have been done by sukuk. The Terminal 3 of the Dubai airport was built with sukuk. Gas pipelines between Qatar and one of the Emirates of the United Arab Emirates, the undersea gas pipeline was built with sukuk. So many planes of airlines, they were purchased with sukuk. The main highway in Malaysia that cuts across the nation, it was built by sukuk. So you can see the potentials, and it's not just sukuk that have been created by Islamic finance. But when you go to the capital market products, you see how the shares of companies are being screened to make them Sharia compliant. That was why the Dow Jones, as early as the 1990s, they created the Dow Jones Islamic Index to track those stocks of companies that will fulfill some strict Sharia screening criteria so that they will be worthy of investment by people who only want to invest in Islamic financial products. Now, this was a very great development. The Financial Times Index also, it created such an index. And here too in Nigeria, we have the stock exchange in collaboration with one of the Islamic fund management companies. They created the Islamic index, which will track those shares in the Nigerian stock exchange that fulfill the criteria of compliance to the Sharia. Also, you have fund managers, and now and even the pension fund, the pension commission has allowed part of its ethical fund to be funds that are Sharia compliant. So you are going to very soon have pension fund administrators being given the option to invest in the capital market products that satisfy the criterion of investment as laid down by the pension commission, and also that satisfy the Sharia criteria of screening of shares. So this will allow new entrants, companies that want to get investments from the pension funds. They will strive to make their activities to be Sharia compliant so that they will be able to enter into that universe. And people who want to have their earnings to be Sharia compliant, they will also have the opportunity to go for this kind of funds under the pension commission. So you can see that Islamic finance is an alternative to conventional finance. And whatever conventional financing product exists and you want to have access to it, if you want to follow the dictates of the Sharia, you will have an alternative under Islamic finance. And it's not only limited to Muslims, as we saw. There are many non-Muslims in Nigeria as well as outside Nigeria that are dealing with banks, with these Islamic banks, either as shareholders of the bank, or as shareholders of the takaful entities, or as customers that are getting financing from it. As we saw, many states in parts of Nigeria that are not majority Muslim states, they have accessed financings from the Islamic Development Bank, and these financings are Sharia compliant. This is my talk regarding Islamic finance. It is a very wide topic, but a very interesting one, and it is a fast developing area, and it is worthy of our knowledge. We need to know what is happening, because things are happening in that area very, very fast. And to keep abreast of it, you have to really appreciate the subject and appreciate what is being done in the several interactions and conferences and webinars that are organized regarding Islamic finance. هذا وصلى الله وسلم وبارك على عبده ورسوله نبينا محمد وعلى آله وصحبه أجمعين.